this is how the system rebalances itself. I think we are in the age of hard assets and tangible goods, commodities. It doesn't mean to say that stocks and bonds are going to disappear, but they're just going to underperform massively. Monday, February 24th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, we're going to look at commodities today, and we're going to look at how gold is leading the way and how the CRB index is making a major breakout. And I think this is the beginning of the second major leg of a secular bull market in commodities. And we're going to refer to Jim Sinclair's A Pocketbook of Gold to see what that means for you, not just in the United States, but throughout the world. Before we look at that, just wanted to thank you again for your interest in the channel. We're getting a lot of new subscribers, and if you're enjoying my content but haven't yet subscribed, make sure you do. Make sure you also hit the little notification bell to be notified of all my new videos. And just wanted to go through a couple of headlines really quickly. The first one that I think is significant, it says here on Bloomberg, just came out, Trump targets China with biggest salvo so far in second term. Sweep of actions involving investment, trade may lift tensions. Trump already wants to address China's trade surplus with the US. I'm going to stop right here. I'm not going to go through the whole article. It just goes to show that the world's getting more and more divided. We're definitely moving away from globalization, and of course the globalists in Europe, in the city of London, the people who up until recently controlled things with the neocons in the US, they're now happy. And I'll segue into what's happened in Germany. The election result was not a surprise. We've had this guy Merz win. He's more to the right. He's not really, I would say, very conservative. If they really want to change, I think they would have done better voting for the AFD. But the AFD only got 20.8% of the vote, even though that's very good. Their second biggest party. The CDU, which is Merz party, got 28.5%. They're going to form a coalition with other parties, not the AFD. And I think the problem with Germany is that it's going to follow, I think, the UK lead of trying to keep the Zelensky regime going. What do I think about Zelensky's proposal for peace? That he'll step down if Ukraine joins NATO. That's a non-starter. The only real reason why we have this conflict in Ukraine is because it's a culmination of 30 years of betrayal by the United States to the Russians, that they would not move an inch past Germany. NATO wouldn't. And here we are. They're trying to get NATO into Russia's doorstep. So, as I said, it's a non-starter for Putin. He's going to say niet. So, another thing, Merz, I think he's on the board or was on the board of BlackRock. So he's a globalist. Anyway, back to commodities and gold. And back in 2020, we saw everything really crash. That was from January to like April of 2020. The stock market, gold, silver, the CRB index. Bonds, of course, were very volatile. They were up and down like a yo-yo, which isn't good either, because treasuries specifically are supposed to be yeah, as good, well, not as good as gold, but they're supposed to be very stable and risk-free, and they were anything but. And that's one of the reasons why Jay Powell had to start QE to stabilize the treasury market. But one thing that happened is that gold dropped from 1750 to 1450. It was very quick, and then it took off. And by I think by July or by the summer of 2020, the same year, gold was back towards 2000, while commodities lagged, and commodities only topped in June of 2022. So gold and silver, to some extent, led the way, and then commodities followed. But for the last, let's say 2.5 years or so, commodities have been consolidating in this pennant formation. As you can see here, this is the CRB index. It's a Commodities Research Bureau index. It's a collection of major commodities. It includes gold and silver as well. And I've been talking about this for the last few months, that it looked like we're going to break out of this consolidation. And usually these consolidations after a major leg up, they can either be, they can be 75% of the time very bullish, or 3 out of 4. Sometimes they fail and the market goes back down. And I think it's definitely breaking out here. And it's a little bit delayed, of course, compared to gold. Gold started breaking out, I think, February last year. We broke through that 2100 barrier in gold, and here we are almost at 3,000. So I think it's going to take a little longer here for the CRB to actually break the June 22 high, which was 330 or thereabouts. But I think we're going to have a major leg up, and I think we're just beginning this secular bull market in commodities, and this is not going to be, it's going to be protracted. It's secular, and I think what it means, along with gold and silver moving higher, is that our currencies, our fiat currencies, are actually they're beginning to show what they're really worth after years of central banking inflation. And by inflation, I mean all the money printing and also the fiscal loose fiscal policy of the major countries. We're up to here in public debt. This is how the system rebalances itself. I think we are in the age of hard assets and tangible goods, commodities. It doesn't mean to say that stocks and bonds are going to disappear, but they're just going to underperform massively. And there's still not that much money in commodities, gold or silver or any of these sectors. And there's been such a huge bubble created in the paper market, in the 60-40 stocks and bonds, that even a small percentage of the money flowing to commodities is going to make it a huge, relatively speaking, outperforming market to stocks and bonds. And I told you in the beginning that I'd tell you what this means, this breakout in commodities. And that I'm going to refer to a pocketbook of gold by Jim Sinclair. He wrote it along with someone called Peter Carlin. And unfortunately, Jim Sinclair passed away, I think it was last year. And Jim Sinclair, I started following him in 2002 when I started buying gold and looking into gold. He had a great blog called JS Mindset. So I have a lot to thank Jim Sinclair for. And it's a shame he's not here to see this bull market in gold. But he did see the one in the 70s, though. Anyway, I want to talk about gold is a revealer of falsely stated wealth. It's on page 70, as you can see here. And it's tough to get this book, unfortunately. Someone asked me if I could copy it and put it in a PDF file, but that's not something that I do. This is copyright. You're just gonna have to search for it, and it's not gonna be cheap, unfortunately. So, gold. Let's see what gold really tells us, and commodities as well, for that matter. When wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. Well, that's what we're seeing now. I think the jig is up for the falsely stated wealth camp. The depreciation is borne by the citizenry, who are forced to lower their living standards to compensate for both personal economic mismanagement, well, taking on too much debt, not stacking enough, as well as the mismanagement of the affairs of states. Well, they're trying to fix that, but I think it's a little bit too late. Anyway, financial and military overextension has a social corollary in overpromised Social Security, Medicare, overstated real estate, equities, affluence. As expense runs out of control, guarantees to the citizenry also explode as politicians seek to retain the privilege of office. But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. And before I continue, just wanted to show you the chart of UK nationwide house price index to gold ratio. And notice how the top of that ratio was in 2004. So that's when houses were the most overvalued versus gold. And you can see that versus gold, UK house prices actually have not done well. Gold is a revealer of falsely stated wealth. So let's continue. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which once bought certain things no longer does, but wages have not risen along with prices. Well, we're seeing examples of the currency not buying what it used to in spades these days. I don't have to tell you. Well, in the US, it's the price of eggs. In the UK, when you go to a restaurant, all the stuff they used to get with a main meal, like the sides, they're all separate now, and you have to pay extra for them. A really nice steak now is 30, 40 pounds. And I remember the day when it was below 20 pounds. Anyway, instead of wealth, citizens get saddled with a big chunk of government debt, i.e., debt created by mismanagement. The result is everyone pays more for food, fuel, and other necessities. Government passes on the mismanagement of economic affairs to its citizens by devaluation. Well, and that's what a rising price of gold, a rising price of silver, and rising commodity prices are. A devaluation. As the imprisoned money manager Martin Armstrong has artfully stated, so this is Martin Armstrong, the decline in the value of a currency is in reality a free market tax taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state. So if currency is an indirect tax, you have to make sure not to hold that much of that currency because you're being taxed. And that's why you need to, in my opinion, have some physical gold and silver. And if you haven't yet, check out the details below in the description of this video. I have an affiliate in the US, Miles Franklin, and I have an affiliate in the UK, Gold Investments. Anyway, the corresponding rise in gold, especially when it is a global phenomenon, well, which it is now, as it is now as well, well, it was back then, 2011, and 2010, is in effect a devaluation of all the world's currencies and a restatement of wealth on a global scale. As is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. So here's where the commodities part comes, and we're almost finished, by the way, if you're thinking that it's going on for a while. Falsely stated and assumed wealth, largely created out of the assumption of debts that cannot be borne, must eventually reset at a lower level. Populations bear the restatement of wealth through the expansion of monetary aggregates, causing a devaluing of the national currency that denominates their wealth. This happens to all currency holders, regardless if they personally assumed any debt. Gold rises because gold is a monetary proxy inversely related to a nation's currency. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase. Debt deflation has become currency inflation. They're one. So there you go. Commodity prices increase. This is all payback time for decades of inflation by the central banks and the governments. So with that, let's quickly look at where the markets are this morning. It's 8:24 a.m. London time. We've got spot gold at $29.41. It's up about $6. The high's been 45. The low's been 21. Silver is only up 7 cents right now at 32.50. It was up as high as 32.77. The low is 32.33. Yes, we had a big drop in the stock market on Friday. The futures right now are slightly higher. Dow futures is up 1/3%. The NASDAQ 100 future is up 0.2. S&P is up 1/4%. I read that Jamie Dimon, the CEO, chairman and CEO of JP Morgan Chase, biggest bank in the world, I think, he sold a third of his holdings of JP Morgan stock on Thursday. So does he know something we don't? So keep an eye on the stock market anyway. What about the currencies? Well, sterling is unchanged. The euro slightly higher. Dollar yen is pretty steady. So not much going on in the currencies. Crude oil is down slightly here, just above 70 WTI. And copper as well is down 0.75% at 457. Yes, you're going to see short-term moves in commodities down. But as I said earlier, I think we're breaking out. And that chart of the CRB points to that. So with that, I'm going to wish you all a great start to the week. Take care. Bye.